So yes, Pranav's question was, uh, are you trading only in stocks? Is it more stocks are more profitable, or are you trading on any other asset class also, like commodities? So which are the asset classes are you trading, and more favorable outcomes you have seen? Is there any specific asset class, futures, stocks, options, uh, forex, gold, ZAR, USD, anything? Aman, would you like to start this uh, topic? Aman Saxena?
Sure. So idea is like again, like can you repeat the question, please?
Sure. So what we were looking at is which asset classes, uh, for a full-time trader, if you have traded in multiple asset classes, which asset classes have you
Mhm.
seen has realized more favorable outcomes or more profits, to say?
Yeah. So I'll stick to like equities in Indian markets as well as FX rates, currencies, something which I feel like they have good potential to yield returns over a course of the day from intraday perspective. So that's my personal thing, and idea is like interest rate, like FX rates are kind of more of mean reverting in nature, so you can place your bets on technical aspects, and stocks are something wherein you can have a good risk to reward already defined, and you can put a system on top of it. So yeah, that's my opinion.
Okay. Varun, Vivian, would you like to add anything? Shivam, on this?
Um, yeah, basically I stick to equities because that's my strength, and generally I start my day by understanding the money flow into the market and find the most active one, basically between 9 a.m. to 9 8 a.m. So and pre-market also, like how like where the money is going and how the money is distributed across the market. And by studying that, I understand like, okay, these are the stocks which might be more active over the day, and then I pick the trades over the day in those stocks. And commodities I don't do because that's out of my working times, but I stick to equities. And they do move well also, especially there would be sectoral moves in Indian markets, especially stocks like ICICI or other stocks like pharma stocks tend to move a lot. And anytime, any point of time, you find at least 10 to 15 active stocks which can move like 2% at least over the day or next 2 hours, which is quite enough for me being a trader who trades with leverage. So yeah, I haven't explored commodities in Indian markets yet, but so this was my experience.
Okay. Okay. So
So
Aman
in Yeah, sorry.
prefers FX and stocks. Varun prefers stocks. Anybody else? Yeah, Amit, please go ahead.
Yeah, would just like to add that I've had experience in facilitating trading in commodities and currencies as such. So FX, one advantage which is there, that your ROI can be enhanced because the margins over there are pretty minuscule. So say for example, if you trade USD INR, the max exchange mandated margin per lot is about 2,500 rupees. Now that is the lowest across all asset classes, be it commodities or even equities for that matter. So I think that can enhance, and also the risk involved is limited. So those who haven't explored it, maybe they can have a look at it, because the average daily range for a USD INR is somewhere like about 15 to 18 paisa in a day, which is about 0.2%. So one might say that the reward is not that great, but as compared to the return on investment aspect and being a leverage product, because we are trading futures. All right, so that can enhance your ROI. So one can explore that. Secondly, on the commodities angle, I think crude oil is one commodity which is both internationally traded, because it's linked to the WDI crude, which is traded on NYMEX, and it's pretty volatile during the day. So there are multiple chances which you can get in trading. So I think one can explore these two things as far as commodities and FX are concerned.
Mrilan, Vivian, you would like to add anything?
Yeah, so I can add. I can
Uh,
talk about. Sorry. Yeah. So right now I'm mostly focusing on equities and indices because I mostly trade on options and futures. So my focus right now is on single stocks and indices. Although I did dabble a little bit in FX for the exact same reason that Amit just mentioned. The leverage is so much higher in FX. Although it may seem to someone that the FX doesn't move as much, but if you multiply it by the amount of leverage you can take in FX, it can be really profitable. But unfortunately for me, the few couple of months that I dabbled in FX, I think one instance was when the inflation numbers out of US were pretty came out to be pretty bad about 3 months back, and suddenly overnight there was uh, huge drop in the value of INR against USD, so I lost some money there. Recently also, I think we've seen INR depreciate a lot compared to USD. So if you're someone like what I was doing, I was trying to trade, do some sort of a range trade, so range trade. So it didn't work very well for me. At neither instances worked out very well for me. But I would be very happy to dabble in it again if I see something on the trend following side which would work well, because the leverages that you can get on FX are just great. But as of now, yeah, I'm just focusing on equities and indices.
Okay, Vivian, thanks. Mrinal, anything you want to add?
Yeah, so on my end, right now I'm not trading. I have stopped trading somewhere in February this year. But the kind of trading that I used to do was pretty much conservative. So I used to do aftermarket limit orders. So that is basically I had a model designed for myself specifically for banking stocks, and it's something that updates on a regular basis. Like the equation for that model changes regularly after each session. So I used to give I had made up some rules, and I used to give aftermarket limit orders. Like on the next day, I'm gonna buy this stock, let's say at a certain price, if it and sell it if it rises up to certain price. So and this I used to do so on Zerodha. So Zerodha has this very nice app called Kite. So they usually at that point of time they used to charge $2,000 a month for this to get this API for Kite. But right now, like I've stopped it because what I saw was many of my trades were actually not getting executed because the kind of rules I had were so conservative that most of the times it's just the money sitting idle in the account many a times. But yeah, I do made quite recent returns on it, somewhere close to 15, 16% on banking stocks. So right now I've taken a bit of a break just to explore a bit more on the variables that I can include on the investment perspective, like the fundamentals perspective. And I'm also trying to develop some skill set around web applications so that I could, instead of doing it manually on my own, like I used to run the codes manually by myself after 6 p.m. or 7 p.m. after the market ends every time. So instead of doing it by myself, if I could have it somewhere on the cloud that the code just runs for me. So yeah, as of now, I'm kind of exploring that side.
Okay, great. I had just one question to the
Yeah.
participants who are trading on multiple asset classes. Is there any specific asset which is more responsive to fundamental or technical, or any specific indicators they are more responsive? Uh, like uh, uh, Vivian mentioned that because of the uh, because of some challenges in the economy, the US dollar was high, appreciated, and because of that, the money was lost. So, is there any specific asset classes where you find more response, more one of the indicators is followed more rather than fundamental is followed more, or technical is followed more, or some other indicators are followed more?
Uh, Ajit, that's a good question. Actually, I wanted to add something to what Vivek said also in this line. So, especially
Okay.
for commodities and forex trading, so the main drivers are economic reports, not just economic reports, there are macroeconomic reports related to US, UK, and Asian markets as well. So, and if it is about commodities, it's also about the inventory reports as well. So, just by using technical analysis, it's very difficult to get money in forex. Especially, it's been becoming difficult for the past 10 years because all the patterns have been taken advantage by the traders and others, and people would know what others would react when a pattern formed, and they would basically trap those traders. But when it comes to macroeconomic reports like interest rates or strength of US dollar, that is a very good indicator. So in general, commodities are inversely proportional to US dollar, and every day an active commodity trader would actually study how interest rates are, like how the forecast of interest rates are, and also what is the strength of US dollar today. Basically, it's DXY, US dollar index. So how is US dollar index today? So that is one main indicator people use it. If US dollar is trending today, basically they would look forward to short stocks, for example, like crude oil, etc. And also they will also look at the trends that are forming in US dollar index, maybe USD UNR, or directly you can see DXY, which is US dollar index. Yeah, so even forex also, forex is like one of the main drivers is the economic reports of US and also how the US dollar index is. Yeah, that's it.
Correct. My experience
Uh,
was also the same. Every Wednesday, there used to be one meeting, and I used to trade in ZAR USD. And suddenly, one meeting used to happen. FOMC meet, other meets used to happen. Employment report, unemployment. So all these reports directly affected the price of the gold, and the gold moved to that. So that is also one of my personal experiences also. Uh, uh,
yeah,
Anybody else would?
yeah,
Yeah,
would just like
go
to
ahead.
add, Amit here. In fact, in my experience, the dollar index not only impacts commodities or currencies, we have a very direct correlation, or I would say inverse correlation with equities as well. Recently, if you see since the last 1 year, actually the Indian equity market stopped out in October 2021. That's been about 8 or 9 months, and that is when the dollar index actually started to rally from a low of 90 to current high of 109.30 or thereabouts. If you see the last 1 month, between July and the beginning of August, the DXY actually fell from 109.30 to 104.70, and that is where we saw a big rally in the Indian equity markets. What was one of the reasons for the US market tanking or possibly a gap down opening on Monday in Nifty is that the dollar index has rallied by about 1% after the Federal Reserve Chairman's Powell speech yesterday. So I think it's not, yeah, definitely the DXY does impact commodities and to a very large extent the crosses, that is Forex directly. But it does have a very good correlation with equities as well. There are several periods in history, like maybe between say 2019 and to the beginning of 2020, when the dollar was pretty sideways. So that did not impact the equity markets much. But in general, when we get an extreme reading on the DXY, that it's extremely oversold and equities are extremely overbought, I think we need to be careful about the equity market at such levels. Or when the DXY is in a trend like it is right now, from a low of 89, it's gone to 109, and possibly it might touch 112 or 113 as well. So this is the time to be, a bit cautious on the equity side, in my opinion.
Okay, thank you.
Thanks for that
Anybody
insight,
else?
Amit. So, idea is like the financial markets are very dynamic, and we are like living in we are seeing something unprecedented from rates perspective, especially in US, and inflation is something which is the culprit. So, what is happening is one has to find correlations every now and then, and Indian equities is no exception. We are part of emerging market equities, and in global theme when rate hike happens or rate cut happens, and the futuristic impression of the same also drives the investors mindset. So yeah, a lot needs to be looked in from correlations lens, and that is something which is evolving very dynamically. So yeah, a lot of equations are are changing very very fast, so one has to be very cautious about how they're looking at correlation per se. Yeah.